Bank of America says the Naira is currently about 20% overvalued and forecasts a weakening of the currency in the next 6 to 9 months at 5.20 to the greenback. Well, meanwhile, the Nigerian equities markets took a breather as the bears eased their grip after 2 days in the red. Money market traders say rates will remain elevated. Chuka Nwachukwu, head of fixed income trading at UBA, joins me for more market updates. Chuka, thank you so much for taking the time out to join us today. Well, there you are. Well, let's start with market action for today. We're at midweek. Today is Wednesday. So bring us up to speed on market action so far. Let's start with today, treasuries, bonds, and the money market.
Okay, today market has been quiet, largely because of the bond auction on Wednesday. Today is the settlement date. And so a lot of people, a lot of traders are actually concerned about trying to raise liquidity for the settlement of the bond auction from Wednesday. So let me quickly just run through what has happened this week so far. We had two major events this week. Monday, we saw inflation figure came out about a 25 basis point movement from 20.52 to 20.77. So that has actually also driven the activity on the fixed income side. Also on Monday, we had a bond auction where we had 3 maturities on offer, 2029 reissued, and then 32 and then 37. We saw a significant rise in yield, especially on the 20 on the longer end, which is 2037, well over about 150 basis point movement from 14.5 to 16%, and this has charted the course for this week trading so far.
All right, let me quickly take you back to the inflation numbers that we got this week. Investors do know that we're in a high inflationary environment. Many economic indicators point to that. The monetary authorities, we all know that. So I thought that the markets perhaps had already priced in an increase. Obviously, nobody knew by what it would increase. But are you saying the market didn't price it in because you're saying that has driven or is now driving activities at the bond, at the fixed income market?
Market has actually priced it in, but then market isn't too sure at what level the increment will be, and so a lot of people felt that it would be much more higher. Some felt that it would be much lower than what it came out at. So if you look at the yield curve, especially on the middle end of the curve and then the longer end of curve, we've seen well over 200% movement in yield, and this is in anticipation of the continuous rise in inflation.
Now, I know that investors are also watching very keenly statements from the Minister of Finance in terms of how the plug in the fiscal deficit for the new budget and government's borrowing plans. We've seen of course an uptick in rates, etc. That conversation around whether or not the fiscal authorities are going to restructure the debt, just stretch them out longer, etc. How are investors in the market, and you also traders? What conversations are you having amongst yourselves in terms of how this is all going to play out at the market?
Yeah, I mean it's a conversation that both traders and then investors are also having. It's very clear that the government will borrow quite a lot, especially on the local market, and that is why we've seen the increment in yield, and that's why also projection that this yield will continue to go up till after the election. And so I don't see any borrowing from any external borrowing on the part, from the government, and so everything has to be done internally. However, we have a major constraint, which is the liquidity issue, and so that's also driving the movement in yield, because a lot of people, the market has been very bearish, and people trying to create liquidity in order for them to be able to achieve their trading activity, and so all these add together is what is actually moving the market and then driving the yield forward.
We're still talking about these yields going up. How much headroom are we talking about here? Talk to us about where rates are right now and how much headroom. Of course, taking into account debt service for the government. The government doesn't want that to get out of hand. Some might argue otherwise, but how much headroom are we talking about here?
So we've seen, like, for the past 2 months, we've seen over 200 to 250% movement in yield. So I still see around 100 basis 100 basic point movement in yield, especially on the longer end of the market on the bond side, and also on the T-bill side. We've also seen bearish sentiment. We've also seen that attraction is also in the longer end, which is the 1-year bill. And so we expect quite a number of movement in yield, considering the fact that government will borrow, and then pre-election year, though the CBN is trying as much as they can to curtail the inflation. But again, I personally don't think there's much they can do as regard the surge in inflation, and then of course pre-election year, and then liquidity in the system. It's going to be very tough.